All right, so HELOC is a home equity line of credit, and the reason I think it's cool for people is because you can capture the equity or use the equity that you have in your house, like get cash, without getting rid of your current 2.5, 3.5 low rate to accomplish that. You get to keep your low rate and you get to access those funds for any equity that you have in your house. You only pay interest on what you have drawn down. You can pay it back at any time. You stop paying interest on that balance. So you can draw it for 5 years, 10 years, or some period while the money's drawn down, or in other words, you're using the money, you're paying interest on it. When you pay that money back, you stop paying interest. You should pull out everything that you are allowed to pull out, which in our case is 80% of the available equity. So if you have 100K available to you, then you can pull out 80K and use that. You know, you just keep it in your bank account if you wanted to, but it would be considered drawn down and you would be paying interest on that amount during that time. So you pay interest on a HELOC when you have the money drawn down. So we're gonna give you an available credit line. If you pull that money into your bank account and gain access to it, you're paying interest on it. If you pay it back to that credit line, you're not paying interest. So you pay interest while the money is drawn down. So I wouldn't suggest using a secured debt like a HELOC, meaning if you don't pay the HELOC, they take your house, right? So no reason to increase the risk on your credit card balance. Leave your unsecured debt unsecured and keep your secured debt for making more money. Or like, let's say, renovating your house as an example. Or I have a couple right now asking to take out the dollar amount so that they can quit their jobs for 6 months and take their kids on a family vacation. And I'm like, I actually support that decision. If they're comparing it to a credit card debt, I have a direct comparison on that. Like, I know that they should leave their unsecured debt unsecured and not secure it. You get what I mean? Or use secured money to pay off unsecured balances. And the reason I say that is because with 17 years of experience helping people get out of credit card debt, I know what people do. They pay off the credit cards, they take out the credit line, then they max out the credit cards again. Now they've doubled their debt. Bad plan. Buy a second house. The whole hack is gain control of assets for as little cash as possible. At this point, you have not put any more cash into your house, right? You're borrowing money from your equity to buy this next house, and you could buy 2 houses. Gain control of as many houses as possible for as little cash as possible. You'll have the ultimate return on capital.